Now then, here's a question. Why would you buy shares in a 10-year-old company which has yet to make a profit? That is the question that potential investors are likely to be mulling over as Uber floats on the New York Stock Exchange. Let's get the latest from our North America technology correspondent, Dave Lee, who joins us from San Francisco. So that is the question. Why would anybody want to invest in Uber? They've never made a profit.
Well, the hope, Ben, and I emphasise the word hope there, is that Uber eventually may make a profit if it can continue to grow and perhaps turn around its balance books. It's losing an awful lot of money at the moment, around $1 billion in the first 3 months of this year. Just 3 months they lost that kind of money. But investors potentially might see a future in that. Shares in Uber have begun trading and they've already dipped. They began the day at $42 a share. That was down from the $45 starting price for people that were buying shares before trading began, and even that price of $45, that was well below what some analysts have predicting. The value of Uber now hovering around the $80 billion mark. Still a staggering amount, of course, but people were talking about $120 billion not so long ago. And so I think this has been a muted debut for Uber, and I think it's a sign of the caution that hints to what you mentioned. How is Uber going to turn around its business to go from one that's losing an awful lot of money into one that pulls in a profit for all of these new shareholders it now has?
But do you think there are some investors who might think, well, you could have said the same at one time about Facebook or Amazon, and they went on to be incredibly successful businesses, of course, and that, you know, that maybe Uber could be the same?
Potentially, but I think there's a big difference. And the difference being is that when it came to Facebook's debut, there was a path to profitability. They had something of a surer plan of how they were going to get there to make money. If you look at Amazon, you know, their retail business as it was when they went public, that wasn't making money. They diversified. They did different things. They started doing cloud computing and all sorts of different businesses Amazon now runs. That's where their profit came from. Uber, it's trying to diversify. It has food delivery. It runs a bike rental service, another kind of smaller business like that. Nothing like the things they need in order to turn around the loss of their main business of ride sharing. So I think that could be the crucial difference here that has investors worried, which is why, unlike with Facebook, where the shares popped on day one, as they say, went up dramatically, we haven't seen that with Uber, and I think that might be why.
All right, Dave, thanks very much indeed. Dave Lee there for us in San Francisco.